Hello, in this lecture we will work a problem in which we will add a new partner to an existing partnership. In a prior lecture we talked about having a partnership sell a partnership interest to another partner. So one partner leaves, another partner comes in. In this section we will talk about having the same partners there and then adding a new partnership. So the question will be here. This will give us the information. We're going to put that information into a worksheet like so, populating the blue areas. We will then record the journal entry in this section, in this blue area here with the debits and the credits for the journal entry. We're then going to post that to a quick worksheet here so that we can see what happens in context in relation to some other accounts being cash, assets, liabilities, equity. This is where we're going to focus because, of course, the equity part of a partnership is the partners. So we got the partners here, their capital accounts. Then we have revenue and expenses. In this worksheet, we could see that we are in balance by the assets or the debit balance accounts not having brackets or being positive numbers for Excel minus the credits means that they add up to 0. So the debits minus the credits equals 0. Therefore, we're in balance. It's going to be a quick way for us to see and analyze what happens within context. We will then post our information here and see what happens to the ending trial balance as we go. We also have the accounting equation over here, so we can take a look at that. Assets equal liabilities plus the equity and see what changes happen to the accounting equation as we work through this problem. Alright, so we got the partnership adds a new partner. Well, first let's take a look at the ratio. So we have the original partners being M, B, and L. They share their partnership profit and loss with a 3-to-5 ratio. So first thing we want to do is break out that 3-to-5 ratio. We might be thinking, why don't we just call it percentages? And there could be some situations where percentage is not exactly even and a ratio is more precise. Therefore, ratios can be a good way to post this information or record this information. We need to know how to convert this ratio format to some type of percentage. So the way to do that, I'm going to go over here to M, and we're going to say that this equals M's portion, which is 3 out of the total. 3 plus 2 plus 5 is 10. So divided by, we can even do that by divided by 3 plus 2 plus 5. So 3 over 10, 3 divided by 10, 30. And if we want to make that a percent, we can go to the Home tab, we can go to the Numbers group, we can percentify it to 30%. B gets 2 out of the total of 10. So we can say that equals 2 over the total of 3 plus 2 plus 5. And that will equal, I forgot the divide sign, divided by, and that will equal 20%. And if we go to the Home tab, Numbers group, percent, make that a percentage. And then L, of course, has 5 out of 10. So we're going to say this equals 5 divided by the 3 plus 2 plus 5 brackets. That will give us 50%. Once again, we can go to the Home tab, Numbers, and percentify that. And then if we add these up, the 30 plus the 20 plus the 50, 100. If we total that up in the total column, that'll verify that we are at 100% equals SUM. Going to sum up or add up these three columns. The 30 plus the 20 plus the 50 will add up to 1. Yeah, because we need to fix the cell and put that to 100. So we're going to go to the Home tab, Numbers, and 100%. So it happens to work out evenly. A 3-to-5 ratio means that we're having 30% M, 20% B, 50% L. Now what we want to do is implement or add R to the partnership. So R is going to come into the partnership, and R is going to get, we agreed on, the partnership agreed on, we should say, that 25% interest to R in exchange for R paying the partnership $140,000. So R is going to pay $140,000, and we are going to give, the partnership's going to give R a 25% interest. So let's see what that will look like. So before we post any more of this worksheet, let's take a look at what we have in terms of a chart of accounts over here. So if we look at the chart of accounts, we are seeing that we're going to put R basically on the books. R's paying cash. So if we start to think about the journal entry, we could say, well, our first question is always, is cash affected? Yeah, that's affected. We know that's going to do something to cash. So cash is going up for the partnership because the partnership is receiving cash. And so we're going to copy the cash, and cash has a debit balance. We're going to make cash go up by doing the same thing to it, which in this case will be another debit. So that much we know. So I'm going to copy that. I'm going to put that on top in our journal entry. We're going to say we're going to debit cash in I-46, right click, paste it 1, 2, 3, not here, pasting the values only. And then, of course, we said that the partner is going to pay the partnership $140,000. So the partner is going to pay the partnership $140,000. Who's the partner that is coming into the partnership? R. R is the new partner. So we would need to increase R's capital account in order to allow R into the partnership. So we know that we're going to credit R's capital account because R is going to have, if R's paying and being implemented a 25% interest, we need to increase the capital account. So capital accounts, you can see, all have credit balances. We need to go make it go up. We're going to do the same thing to it, which is another credit. So we know we're going to credit R's capital. So I'm going to copy that, and I'm going to paste it right here in I-47, right click and paste 1, 2, 3. Now we know it's going to be a credit, but the trick is that we're not sure it's going to be $140,000 because the problem said we're going to give a 25% interest for the $140,000. Therefore, what we need to do is figure out what is a 25% interest in the partnership. And we know that the total equity represents assets minus liabilities. So in this case, the cash of $550 minus the liability of 10 is, of course, $540 equals the equity of $540. So you would think that at this point in time, a 25% interest would be $540,000 times 0.25, 25% interest. So you would think we'd put them on the book at 135, but we have to add to that the fact that there's cash. Cash came in on top of this, so cash is going to go up, which increases the book value. So let's think about that in terms of our worksheet over here. Try to see what we need to record in terms of the capital account for R. So if we think about what we have so far, this is our total capital. This is what's recorded on the trial balance for capital for M, B, and L partners. And we know that another $140,000 is going to be implemented into the partnership when R comes into the partnership. Therefore, the capital account, the net assets, are going to go up by, of course, 140. Therefore, we're going to add this up. We're going to say this equals the original net value of the partnership plus the 140,000 that the new partner is now implementing, gives us a total of 680,000. Then we're going to say that's now the new value of the partnership, and we are now adding the new partner at 0.25, 25%. We're going to give a 25% of the book value, or the total equity section, which represents the book value of the company, to the new partner. So 25%, if we want to see that in the form of a percent, of course, home tab, numbers group, and percentage. And that means that the new partner needs to be on the books at this 680 times the 25%. So the new partner is going to be on the books at 170. So that's the answer to this question over here. We're going to put the new partner on the books at a credit, negative, in this worksheet, 170,000. All right, so we have that. Now, of course, we have this other issue in that the debit doesn't equal the credit. So the credit is higher than the debit by 30,000. And the reason for that is, of course, if we're going to put the new partner on the books for 170 and they only paid 140, then the other three partners are going to have to split the difference. So we're going to have a debit of 30,000. What account will that 30,000 go to? Well, it's going to go to M, B, and L. Do they necessarily like this this situation? No, because their capital accounts are going to go down. We're going to debit their capital accounts, reducing their capital accounts because they basically are giving more of their interest to R than what R is paying. Now, you might be thinking, why? Why would they do this? Why would they allow R to have a 170% interest when R only paid 140? Why wouldn't they make, that even out? And the reason, there could be multiple reasons for it. Maybe the partnership is thinking that not all the assets are represented properly, really, within the financial statements. There could be intangible assets or liabilities that aren't really represented in terms here. It could also be that they think that R is coming in to the partnership with a lot of their own personal assets that will increase revenue in the future, and therefore it is worth allowing R on the books and given a larger portion of the interest than R is paying into the company because of the potential future growth just based on who R is, and that could be a reason as well. But in any case, that's what's going to happen, and therefore we're going to have to reduce these capital accounts for the other three partners. How are we going to do that? We're going to do it in accordance with their profit sharing ratios, which we decided were 30, 20, and 50. So we decided that we're going to have to allocate the difference. So I'm going to calculate that difference again. We're going to say this equals I'm going to do it this way, the 170 that we're going to allocate to the new partner R minus the 140 that R put into the partnership, which gives us that 30,000 that we're going to have to reduce the existing capital accounts by for M, B, and L. So we're going to do that through this percentage ratio. So we're in here for M, we're going to take that 30,000 times M's 30% tab. So we're going to reduce M's by 9,000. And then for B, we're going to say this equals the 30,000 times the 20% for B. So we're going to reduce B's capital account by 6. And then for L, we're going to say the 30,000 times the 50% and enter. We're going to reduce his capital account by 15. If we add those up, adds up to the 30. So this is how we're going to reduce that 30. That's the plug that we need for our journal entry. So let's calculate what the new capital accounts will then be. We know that R is going to be on the books for 25%, which we said was the 170 over here. So this is just the 170. And then M is going to be on the books for their current capital account minus the part of that 30,000 that they're going to have to eat in order to bring R in. And we're going to say B's capital account is going to equal the 124.2 minus B's portion, 6,000 of that 30,000 they're going to have to eat. And then we're going to say that L is going to equal the original of 264.6 minus the 15,000 at the 50% that L is going to have to eat. And therefore, this is going to be our new allocation. If we add those up, it's going to add up to 680. So I'm going to sum this up and add these up here. And that should add up to 680. So at the end of the day, after we post our journal entries, R should be on the books at 170. M should be on the books at 142.2, B 118.2, and L 249.6. Let's see if that's what happens when we do this. So we're going to go back to our journal entry, and we'll post our journal entries here. And we said we were left with these debits that need to happen, which was 30,000. We now know that we're going to break that 30,000 out between M9, B6, L15. So I'm going to say M, B, L. I'm just going to copy all of them. I'm going to highlight, right-click, copy, put our cursor in I-48, right-click, paste 1, 2, 3. Then for the debits, remember they have to be debits because we need more debits in order to make this balance. We're going to say this equals the 9 for M, enter, and this equals the 6 for B, enter, and this equals the 15, enter. So this is going to be our journal entry. Is it in balance? Let's see. Well, the debits add up to 170. The debits minus the credits add up to 0. So that we are in balance here. Now, note that also I have this credit up here, and under a perfect world, we would like to have all the debits on top and the credits on the bottom. Again, I want to point out that if it helps you to either build the journal entry and or to go back and audit what you have done later on, I would abandon the rule of having debits on top and the credits on the bottom. However, if you're putting this into a computer system, into some kind of system that's required to have it in that format, or if you have someone that's very picky that's going to review the format, then you may want to put all the debits on top. All right, so let's post this out then. We're going to post this over here and see if it does what we want it to do. What do we want it to do, or what do we expect it to do? We expect these capital accounts to line up with this information here. All right, so we're going to post cash first. I'm going to go to O46. I'm going to say this equals and point to that 140. That's a debit. This is a debit. It's going to make the debit go up in the debit direction to the 690. We're then going to post R's capital account. So here's R's capital account here. Here's R's capital account here. Here's the blue area related to R's capital account. And we're going to say this equals and point to the 170, bringing the balance up from 0 to 170. Then we're going to post M's capital account. So here's M's capital account. Here's M's capital account here. It's a credit. We're going to debit it. That'll make it go down. So we're going to say this equals the 9,000. That should make this go down to